Hello everyone, how are you? I'm here to discuss about real estate investment. Real estate investment is something people don't understand. They just look at the property and do their investment. They don't calculate actually how they are going to make money. For example, there are different uh, markets in the world where you basically invest your money, but when you're calculating your income versus your paying, you're paying more than what you're earning. So that investment is not an investment, is a dead investment. I always tell you, what happens tomorrow after 10 years, what would be the value of that property is not important. What that property is making today is important. So that is a very important point that we have to consider before we are investing our money into a real estate. So why Dubai is a very attractive investment market for real estate? Because Dubai majority of projects generate a lot of positive cash flow for the investors, where investors make good amount of money. Like when you're calculating before your money from the loan, you will see a big change where you're gonna pay, like, let's say 3 to 4% to the bank, and you're earning between 6 to 8% ROI. So basically this 2 or 3% the extra income you're getting in your pocket. So this is the beauty of Dubai real estate market, and that's why the people love to invest in this market, because of getting a high ROI. According to me, being a realtor and being into a finance business from long time, I always advise people, always consider before buying property, even in Dubai or anywhere in the world, is a positive and negative cash flow. So whatever things add a value in your pocket, it's considered as a positive cash flow. Whatever money go out from your pocket, it's considered as a negative cash flow. There are, like, people give example, buying a property and buying a car, which one is a best thing to do it. People do, go to the showroom, buy like expensive car, paying 10,000 dirham, 20,000 dirham EMI to the bank, and that car is not bringing any money into their pocket. Their car is going to take the money out from their pocket. But when you are buying property and you are doing right investment, means you are choosing before buying property is a positive and negative cash flow calculation. You are going to buy a right property and you're going to get the positive cash flow in your pocket, and that cash flow can afford your car EMI. This is called a smart move. Buy a property, earn the positive cash flow, and use that cash flow towards your car EMI. This is called a right approach for the investment, and we have to consider all these things while we are in this world. So guys, the most important part, what happens when we are even into the business, we have we have a business, we have income, we have expenses. So when we calculate our income versus our expenses, that will tell us, are we into the positive cash flow or negative cash flow. So how that negative cash flow works, sometime we are doing business, we are earning profits, but still our expenses are more than our profit. We are calculating the gross income, not a net income. So when you calculate gross and net, then you realize the actual profit and actual loss. So if your business is not generating enough revenue and your expenses are more than your earnings, you will land up into the trap, which is called negative cash flow. And negative cash flow will always fulfill from your own pocket. Either you will sell your own properties, you will sell your assets to run that business, or you will definitely raise the money, use that capital towards your business, and you will try to survive. So this is not a right approach. The right approach, you have to take right decisions. Wherever is your losses are happening, you should stop them. You should cut down on your cost, bring down the cost, and focus on your income more, and then you will have a very stable business, and you will have a stable income. So that business, real estate, or being a salaried person, that is a very, very important thing that we have to consider whatever we are doing.